Hey there, Russell traders. David here of TradingFibs.com to bring you the Russell recap for June 13th, 2013. As always, please seek financial advisement when trading with your money, as these videos are for educational purposes only to support your knowledge in the market and see what is going through my head on any particular given day. Always make sure you have a solid trading plan and never move your stop when placing a trade. Well, how about that? That is a picture-perfect day in my sense. Call that a Hall of Famer day on all four indices. Popping up 230 ticks from the low of the day to the high of the day on the Russell. Some major pointage on all the ES upper left, YM upper right, and the NQ. You're asking yourself, what is this green and red line? That's the 25-minute open range. You can see the market struggled a little bit in the first hour on all four indices, not knowing which direction to go, and boom, pop, grind it all the way up, and what a great day it was. Turn off the TV, turn off the news, who knows, rollover day, institutional buying, it doesn't matter. I trade what's on my chart and what's in front of me. Volume today, their all-time high of this quarter. Last time we had a day like today was back in mid-April on the 15th, tax day of all days. Back in mid-December, back in beginning of November, we haven't seen volume like this. So, taking a look at our indices in the EMA, and the big question of the day is, where did you get out? How long did it keep you in the trade? I make it simple. Simply crossover on the EMA on the way up. Kept you in the trade. Contracts coming off at specific places, moving your stop up, would have taken you to a maximum profit of the day. As you can see, again, the morning chop a little bit. The ES had the nicest picture of the day on the EMA crossover. One crossover, 1 hour pre-open, and the rest of the day straight up. The YM chopping up a little bit in the morning session with the NQ as well, and the TF, which we'll show you in a little bit here. But all the same pictures today. Crossover on the EMA, Heiken Ashi bars keeping you up, all above 25-minute open range, all on momentum. Looking at market internals, our market internals on the tick, all in the green for the most part for the day, above the zero line. Again, looking at these 2 days back to back, straight shot down and coming up to a high of 21.53. Why fight the trend? Here we have a 9-to-1, almost 10-to-1 on the NYSE, 4.5-to-1 on the NASDAQ, giving power to the upside. Looking at the market internals on our Russell only. Again, same pictures today. And again, back to back, down and back up. 9-to-1 on the NYSE, 4.5 on the NASDAQ, and then here's my Russell right up, and again, back-to-back advancer decliners. Advancers really took charge today on the Russell, holding at the pivot line, really never tucking under much, and again above zero for the remainder of the trading session. Just when taking a look, the three main charts that keep me in a trade, that is the question of the day. What keeps me in the trade as long as I can on any given session or any trading session as it is? With a little bit of chop here at the early morning session, I'll go into this in a little bit, what would have kept me out of this trade or taken off contracts here. Really just wanting to break out, as shared in my trading room. No trade until at least breaking above the daily pivot, and as you can see, the daily pivot just burst up. The only major resistance on the way up was the weekly pivot. As you can see, a little chopping action here at the weekly pivot, and then from there, sky's the limit. Didn't have much to the upside here. Again, price action above the 25-minute open range. The EMA crossover, which actually happened within the range. Our 1 hour open range here at 974.3. Chopping it up here sideways. Market for a while didn't even want to touch that daily pivot, and then broke upside and sayonara. As you can see, I have two EMA charts here. I'm going to blow these both back up. And First chart is a 534 EMA, so price action inside here in the 25-minute open range, and then 1 hour open range, and then upside, keeping you in the trade. Heikin-Ashi bars, this is all buying, folks, and lining that up. Some nice consolidation here inside the open range, and boom, we are 5 above 1321.80 and just riding it up. 5 stayed entirely in the entire session above the 1321.80. So what were the major lines that really kept this in the morning session from taking an earlier entry? Was right here, the daily pivot. And again, daily gap, daily pivot, sometimes can be a no trade zone. Chopping action, as you can see, I really struggled here at the daily pivot. Now, really not wanting to go there. Actually, at one point, hit the daily pivot, and boom, came down 10, 20, almost 20 ticks there. But as soon as the market gave some momentum right here, at 8:40 Pacific Coast time, on the EMA crossover just prior inside the range, it was all upside. So you got to ask yourself, where do I take targets off? If it's upside and it's moving up, well, R1 up here could have been your first major target if you're looking at just daily support and resistance lines, and then set your sights on higher up here at R2 and move your stop to R1. That could have been one way of trade management. Again, my style is to tell you when to get in after the 25-minute open range. Today it was not just an indicator of the 25-minute open range. It was more an indicator of breaking above the daily pivot. The 1 hour open range, again, if your daily pivot was the line in the sand in the morning, a 1 hour open range with a high of 974.3. So looking back at our daily pivot here at 976, lining that up with the 1 hour open range. So draw our line in here, 976. So a gap in between our 1 hour open range and daily pivot here. Daily gap zone was just really, in my sense, a no trade zone until this market decided where it was going. So again, another management style is you could have set a target here at R2 on the 1 hour open range. R3, you could see price came up to the R3, chopped up a little bit downside, and then just kept going up. And Camarilla lines also. So we really almost had a trifecta line here in the morning session before this all broke upside. So while I am a big fan of momentum above the 25-minute open range, I don't necessarily have to take the first bar. I just have to look at market internals. Market internals were a little bit, actually, if we go back to market internals, you see a little bit of two triangles up, 15, we got one down, hanging around 0, so the market really didn't decide where it was going yet. Breadth was pretty much flat until it started coming up. AD line, again, little nice break up, a little bit sideways action, and then really started pushing up. So a lot of that action corresponding to this right here on the Camarilla line H3. Momentum above Camarilla H4. You could have taken off targets here at the Cam H4 as well. Again, it's your preference where you want to take your positions off. Again, weekly pivot, a line in the sand, but really, when it comes down to it, I am a big proponent of Fibonacci's. And so on the Fibonacci's, I'll tell you what stopped me also from getting in right above the 25-minute open range. Drawing a line from the low of the low below the 534. So I have the 534, I have a crossover taking the lowest low, coming across the line on the pullback. And so what I had here is a 50%, target number 1, which has an 85% probability. So let's take a look at this. So the market opens. Market opens, chopping up, waiting for my 1 hour open range, knowing where the daily pivot is above, knowing where the daily gap is, and almost just saying hands off, not going to trade inside the daily gap and pivot. I have a, right here at 976, I have a daily pivot. And so first price action that broke above the 25-minute open range right here, the 50%. Target number 1 hit, boom, and comes down back into the range. Not much room for profit here. If this is going to be my first bar, my bar has already hit the 50%. So hands off. I'm not taking the trade yet. I'd like to see a price action knowing the pivot is right above at 976. I'm sorry, up here, 976. I know the daily gap is below. I know I have my 25 open range. Momentum to me was going to be above the daily pivot. Price action comes back in, chops it up, comes back up inside the pivot, inside between the pivot and camera H3 and other lines that I'm looking at on my trend lines, and eventually breaks to the upside. So here would have been my first bar at 8:41 Pacific Coast time. Yeah, I know, an earlier entry just on the EMA crossover would have been nice, but I'll tell you, if you just take EMA crossovers, you get chopped up, such as right here in the morning session. And prices rode it up from there. Now, another way of looking at this is, could I just use Fibonacci to take off my trades? And watch what we have here. So price action, Fibonacci extension. Price finally breaks out above my pivot. I go to the lowest low before the crossover. I take the lowest low before my pullback here. And boom. What do I have? I have a full move for the day, just like yesterday, to the 261.8. That is a full move. If you look at yesterday's video and charts on my blog, you will see that we made exactly to 261.8 yesterday. What's the trade management here? Trade management again is I didn't take anything till breaking above 976 because that was the daily pivot. Right here would have been your entry. Target number 1, target number 2, target number 3 was hit. Contracts off. Each time you move up, you can move your stop up with it. Just knowing where the full extension move for the day is just another trade management style. Again, the simplest of simplest here is staying in the trade and remaining in the trade would have been the EMA crossover. That would have kept you in. Just a simple fact, Heikin-Ashi bars, nothing really technical to this, is just an EMA crossover. But it's knowing where the momentum is. The market internal supported it. I know it was a slow grind, perhaps institutional buying. I don't care. It rose above the daily pivot, 975 up to a high of 991. 975.85, so nice little drive up here. So 975, gotta do my math here. 999, 980, 970, so about 150 tick move. Nice little day. And again, using the EMA, the 4 EMA crossover to support your move. Here you can see the choppy action on the 4 EMA up, down, inside the 25-minute open range until the breakout here. Again, 976 is my open, is my daily pivot. 976. And again, 5 EMA was above the 13, 21, and 80. So all said being done, the best move of the day would have been above the daily pivot and gotten you 150 ticks that you didn't have yesterday, or taking ticks off along the way, keeping a run around, moving your stop up. Again, not very much of a pullback. Nice day on the market. Wish we could have all days looking like that, huh? Well, that concludes today's Russell Wrap. Feel free to stop by tradingfibs.com or any of my social media outlets to obtain more information. My mantra, know one thing, know it well. I trade the TF. That is all I trade. However, my method rings true, as you can see, for all 4 indices today or any given equity. My plan will keep you disciplined. You can find me every day on Twitter at Trading Fibs, and as always, I leave the crystal ball for those that want to figure out what's going to happen tomorrow. I only trade what's in front of me and on my charts. Folks, I'm finishing up a ebook, a manual that will take you through step by step of what I go through in each morning, which should be available within the next month. I also have a live trading room that is currently open to a select few and will eventually open up to the public. Let you know more details on that in the future. Until then, have yourself a blue zone day.